We do get asked often what might get the rest of the world going from a stock market perspective, what might spark a rally in ex-US markets, because as we all know, broadly speaking, US equities have easily outdistanced most markets around the world, both developed and emerging, in the last 10 years. So we get that ex-US stocks are attractively priced, but the idea would be, what's the catalyst? And I wonder, and may not come to pass, if we get a very pro-growth policy construct here at home, lower taxes, a lighter regulatory touch, like or dislike the fellow that won the election in November, the President Trump, and maybe a tougher tariff and trade backdrop, which we seem to be getting. If those two things together don't come together and get some countries around the world to think about their own economies, what they can do or what they might need to do to spur growth, spur consumption, spur innovation. And I really do think that an ancillary benefit of what is a unsettled geopolitical point in time right now could be economic reform around the world that really does get ex-US markets going up into the right. And that would be, I think, a win-win for those countries and for US investors. So we get asked often whether or not this fantastic US equity bull market we're living through can continue, especially considering the fact that the S&P 500 just put up 25% returns 2 years in a row. So we think the bull market does have legs, should have legs, for a couple reasons. One, if history is any guide, US bull markets tend to run 3 to 5 years. We're less than 2 years into this one. Corporate profits still are growing low double digits. The labor market's in pretty good shape with an unemployment rate in the low fours. So if the jobs market is okay, the consumer should be okay. If the consumer is okay, the economy should be okay, because the consumer is about 70% of US GDP. And if the economy is okay, corporate profits should be okay. And ultimately, corporate profits and interest rates matter more than anything else to stocks. So if inflation can continue to go sideways to down and corporate profits can continue to move sideways to up, US stocks should continue to do well.